In this video, we'll be creating algorithmic strategies for futures, especially for Nasdaq, because it's one of the most popular and liquid markets. Today I will focus on the data part because it's the most crucial one. Data quality determines how realistic your backtest and results will be. Generally, every strategy begins with a thought, an idea. For our example, let's say I want to trade Nasdaq futures, symbol NQ, using a trend-following breakout concept. That simple idea will guide everything that follows, from the data I need to how I will test and build strategies inside the StrategyQuant X. Data is the foundation. Before we even open the AI wizard in StrategyQuant, we must prepare good, reliable data, because data quality decides how realistic your backtest will be. We'll be using Nasdaq futures continuous contracts, gap-free and high quality, because that means trustworthy results. Poor data quality equals unreliable and unrealistic results. When I mention continuous contract, what does that mean? Futures contracts are quite special because they expire every few months, so a single contract only covers a short period of time. A continuous contract joins these expirations together into one smooth price history, so we can have a single uninterrupted chart. This allows us to backtest and build strategies across many years of the data without those gaps. StrategyQuant works perfectly with continuous data, but we must prepare it correctly. So, where can we get high-quality futures data? There are many ways. You can source data directly from your broker, such as Interactive Broker or others, or from data vendors like IQFeed, Quandl, or any other data source that can be imported into StrategyQuant via import function. In our case, I'll be using the prepared data provided in StrategyQuant. Just note that these data are available only if you have the Ultimate license. So, always remember to check the data for its completeness and for its consistency before you start using them in StrategyQuant. Next, let's talk about the instrument setup, because when we configure an instrument, we find several parameters which are crucial for our future processes. One of them is tick size, point value, commissions, slippage, spread, and trading sessions. Each instrument in StrategyQuant must be configured accurately. For Nasdaq futures, the tick size is 0.25 index points. That's one tick. Each tick is worth $5. Since there are 4 ticks per point, you can also know it has a handle, then 1 full point equals to $20. Where did I get the details regarding symbol configuration? Directly from the data provider. In our case, because we are using future type data, we can verify directly as CME group. We must also ensure that our trading sessions are aligned with CME Globex hours, because correct session setup ensures consistent result. You can verify this and the rest of the details directly at the CME Group website. For Nasdaq futures, you will see the same specification I mentioned earlier. So, we can see that contract unit is $20 per point. 1 tick equals to 0.25 index point, which is equal to $5. That means that 1 point or handle has 4 ticks. So, a move from $1,000 to 1.001 equals 1 point, or 4 ticks, or $20. So we can see that the sessions are from Sunday 5 p.m. to Friday 4 p.m. with daily maintains from 4 to 5 p.m. Central Time. This is the same configuration we will apply inside StrategyQuant. Now let's talk about trading costs. Realistic strategies always include commissions, slippage, and spread. There are several commissions components, broker fees, exchange fees, and NFA fees, but we usually combine them into one total commission at the instrument level. For NQ, I will use roughly $2.50 per site or $5 per round trip. The typical spread is 1 tick, meaning $5, and slippage is also about 1 tick, also $5. These apply both on entry and exit, so a full round trip might cost around $20 to $25 per position once everything is included. Now, let's switch to StrategyQuant and set these things up practically. In the first part, I covered the theory, why good data matters and what to pay attention to, and now we will go step by step inside the platform to set it up in the right way. We are inside the StrategyQuant platform, and let's get into the configuration. You can import futures that are directly from your broker or any other data source in CSV format. Alternatively, use the data accessible via StrategyQuant as I will do. In StrategyQuant, let's navigate to Data Manager, because this is the place where we will configure all the trading data, instruments, sessions, and more. So here I go to the Data Manager, and I can see a list of all my accessible data, instruments, sessions, etc. Now let's focus on the symbol itself, and let's add a new futures data. I'm gonna click on Add and Find Data here. I'm gonna type in NQ because that's what we are looking for, and I can see that we have NQ and NQ.D. The D means just the daily, as you can see here, but we want to have the intraday data, so the NQ. Leave the option at the default, confirm and agree to the usage conditions, and click on Add. You can see that the new symbol appears here, and when I open it, you can see that the instrument assigned to this is NQCME. You can also see that the symbol appears here now and the data is empty, which is fine because we did not update it yet. For now, we just want to add the symbol and configure its instrument. So, as we saw earlier, we are using NQCME instrument. So now let's verify the instrument, and that's where the major configuration takes place. Now let's verify the values used in the configuration of the instrument. So, tick size, as we said, should be 0.25. That is correct. The point value in dollars is 20, and tick step is also 0.25. I'll say that I'm going to be using spread of 1 tick, and slippage equals to $5. We do also have the commission. So spread is set to 1, meaning 1 tick, and slippage is set to 5, as we said. I also mentioned earlier that I want the commission to be in the size of $2.50 per trade, meaning $5 for a full round trip. Here, as I can see, it's applied per trade size, so if I want $5, I'm just going to apply 2.5, and it's going to apply it on both exit and entry. Click Save. Next, we will define the trading sessions according to the CME group. Let's go to the Session tab, click Add New Session, and let's name it NQCME. I click on Add, and from earlier we know that the session is from Sunday 5 p.m. to Friday 4 p.m. with a daily maintenance break from 4 to 5 p.m. Central Time. So let's add this, and we are going to be starting with Sunday 5 p.m. to Monday 4 p.m. And session end means end of day. Save. Gonna do the same for Monday. So Monday from 5 p.m. to Tuesday 4 p.m. and the session end means end of day. As I have it, I'm gonna click on Add Monday to Friday, and we're just gonna make sure that everything is correct because the 6th entry here is incorrect. So I'm gonna remove it because we said that the session is only from Sunday to Friday. So Friday 4 p.m. is the last trading day in the week. Let's click Save. I can have a special character here, so let's delete it and just save it as NQCME. Be careful with time zones. they must match the time zone of your data provider. Save it and it's done. Now that everything is configured, we can go back to the data, select the NQ, and click on Update Selected. You will see the progress in the log window, which you can see here. Once it finishes, you will see the record confirming that the data is downloaded. Now, seeing we have new data in the NQ, we know that everything is ready and configured correctly based on our theoretical part. Now you can go to the builder, open the full settings, data, and here I'm going to choose the symbol Nasdaq, which we just created. And you can see that the commission slippage and spread was automatically assigned from the instrument settings we just defined. We have the spread here, slippage, and the commission being defined. Remember that spread and slippage can be defined at the task level, since we can adjust them later to test its robustness. And that's all. Our data is now properly configured and ready. We set high quality continuous contract, we configure the correct instrument parameters, trading sessions, and realistic commissions, slippage, and spread. Now we can move forward with the building process and start generating strategies with confidence in the foundation of our data. And that's all for this lesson. If you liked it, don't forget to hit like and follow.